First and foremost, I appreciate you guys for taking some time out of your night to come and listen. Really means a lot. Just to really briefly kind of go over what we're going to be talking about today, I'm just going to compare '08 to current market of 2022, kind of just compare the similarities and where we're at potentially where we're going to be going in the next couple of weeks. Now, obviously, this can all change. It's not the same as 2008, but it does have a lot of different similarities. If you'll notice it once we start kind of breaking it down a little bit, but we'll go into that, and then we'll go into just some actual, just kind of just charting stuff for for um for just my SPY levels and whatnot, and like how do I make my actual charts. So we'll go over that today as well. And then if we have any questions and everything at the end, we can get into that as well. So if you guys have any questions or anything during the entire presentation, just feel free to drop it in chat and I'll answer it when we get there. Okay, so first we'll kind of go to 2008, and then we'll also compare it to the overall market. So 1 second here. So we had that massive, really, really large run up, and right after we got a huge tank. So we had a huge tank. Let me get to the actual one right here. So had a nice leg up, and then we had a little bit of a tank back in '02. Had a huge run up, which we kind of saw right here. Then we started to actually start forming the pattern itself. So this is when we actually form. If you kind of see here, I kind of mapped it out, the same thing. They're just happening very, very similar. This is where we're at actually right now. So if you look here, so we're right in this exact spot. So this is something that possibly could happen. I'm not going to say it's going to be as extreme, but we are extremely over leveraged. There's tons of economical news. We are possibly 90% chance going to go into a recession sometime this year and or next year. But then if you kind of see here, if I kind of zoom in a little bit further, so you see here, we got a couple weeks of downtrend, right? So we got a couple weeks of a downtrend, had a nice, we had a rally first, which is right here. Then we had a couple weeks of just straight selling, just straight, fearful selling, right? And then this is the current week we just had. So this was last week. We had a nice, really, really aggressive week. We had a bounce off that 385 level, and we finished the week pretty strong. So this could be the scenario for possibly somewhat of June. We could see kind of a relief rally. It would match up in the pretty much the dates as well, because we're only about a month behind. So here is kind of the July where we start bouncing, and we're going into June. So we're only, in a sense, a month behind schedule. Now, it doesn't have to be 100%, completely the same, but you kind of get the picture that it's looking very, very similar. So these are the things you want to pick up on, because usually history ends up repeating itself. It might not be to a T, but even if we, kind of get somewhat of a general idea, we can possibly capitalize off that to the downside. And then whenever we inevitably reverse, because every single crash in history, we end up reversing. So whenever we end up reversing, we can kind of catch that as well. So we can catch a possible downtrend, and we can possibly catch the bounce, right? So then just to kind of keep going a little bit further. So I think this is where we're bouncing right around here. This is right, just to kind of highlight it, right about there is kind of the same as right where we're at right now. So we could very well bounce to kind of the top of this channel, a little, in a sense, bearish flag, and then we could just break below it like we did last time back in 28. So we could very well see pretty much a relief rally to maybe 430 max. I really don't think we're going to go anywhere like super far up. It would make sense because we have a big old resistance right here at 430. Makes sense. It's a psychological whole number. But if we go like right to the top of the actual flag itself, it's probably about 425. So we can very well expect a little bit more of a pump until we inevitably get that huge bullish trap. and just start kind of just fading and simmering away for the next couple months, because this might look really aggressive. It is aggressive, but it did took, it took a couple of months. So we're not just gonna, skydive and just fall and plummet. We're gonna kind of, go down gradually over the next couple of months, because there's always going to be a pullback in some sort. The market's not just going to be able to just tank, 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 tank. There's always going to be some sort of a pullback. And that's another reason why it takes a little bit longer, because right here alone, this consolidation was an entire month of just basically just kind of just in a range. We're just range bound between these two, not right here. And then we finally started breaking that range, had another pump down, kind of another little of bit of a consolidation flag slash wedge, whatever you want to call it. And then we had that last final leg down before finding a bottom. And then we had we had an extremely, extremely aggressive rally for, a long, long time, besides when we came into 2020. Like we had a couple hiccups in 2016, 2019, but nothing as drastic as that black swan event of, the COVID lows. So that could be a possible scenario. We could have a semi relief rally, maybe to 425, maybe to 430, before we start seeing that slow grind down. And then the next real areas that I have as pretty much targets. So this is the pre-COVID high. So this is where the market was before we had that significant drop. So clearly this area is going to be extremely, extremely significant. So the first real target that I'm going to have is, because here's that other target right here at 368, let's just call it 370. That'll be our first main target. And then we start coming through this liquidity area where lots of buyer participants and seller participants like to hang out. So we'll go to 340 next. And then the next real major target would be around 325. Now, I'm not going to say it's going to be super, super drastic and super, bearish, but the long-term horizon target would be about $300. So just kind of expect somewhere in between this area, anywhere from 340 to $300 is a very, very realistic target for SPY. So what can we do about this? If we know that a possibility that we could very well start having another relief rally, a kind of a rally in a sense, first you can capitalize that on day trades. We can, play the upside, and then we can actually be super savvy and open longer term swing puts. And then our stop loss is already predefined. Hey, there's a super hard level right here. Oops, super hard level here. This is 2 weeks worth of resistance. This is my stop loss. Above here is my stop loss. So you can enter puts somewhere towards the top of this flag, and then your stop loss is relatively very minimal. Open a couple month out swing. Even if you can afford it, open entire leap. If someone doesn't know what a leap is, that's basically like a yearly contract, or you're buying a very good amount of time horizon. And then you're able to have a general guesstimation. Okay, we could possibly go to 360, we could possibly go to 340. So you could open long-term puts around these strikes. So when you open puts towards a top, like up here towards the top of the flag, you're going to be catching a larger amount of the move, and two, it's much better premium wise, how much you're spending on a contract. Because if you think about it, the VIX won't be super, super juiced when we're up here. It'll be a little bit less inflated. So when the VIX isn't juiced and the implied volatility isn't juiced, your contracts will be cheaper. So you're going to get a cheaper and much fairer value up here, rather than you missing the train and trying to enter puts way the hell down here. Because way down here, you already missed a shit ton of the move. I'm not saying it's, a horrible thing by any means, but like, if you want to be correct with your entries, you want to be entering somewhere up here, not after the move has already, happened, and possibly, let's just say, for example, we enter here and you enter way down here. This is a 10% retracement. Like, you're missing a big, big amount. So I would recommend looking to position into puts for a longer term horizon. If you can afford it, go out of the money. Ideally, you want to be above a 0.20 delta. If you can afford it, the best would be about a 0.30 delta for your contract. So it's a little bit farther out of the money. Entirely up to you. This is just all speculation. We could very well, rally to 450 for all we know. But if it ends up pretty much doing the similar pattern as it did before, then this is a good possibility and a highly probable trading theses that we can structure for ourselves. So we can day trade the move up, or even short-term swing the move up. And then once the move starts kind of, in a sense, what's the word, in a sense, rejecting or not that much bullish volume, the bull starts becoming exhausted, then that's when we want to be looking for shorts. We can either day trade the shorts or we could swing the shorts. I would highly, highly recommend, if you are swinging and you want like more of a longer term horizon, I would probably look for at least a month minimum, because people that swing like weeklies isn't, like the theta is a thing. You don't really want to be dealing any of that type of stuff. If you swing weeklies, maybe hold it for a day, but the theta is definitely killer. So you kind of want to be aware of that. But do you guys have any questions with this kind of breakdown of the overall, pretty much the market comparatively to 2008 and 2022? If not, I'm going to go into some charting, some levels here. So just ask me some questions if you have any now. All right, so let me go over here then. Okay. So how I make my levels is a teeny bit different from a lot of other people. Is the pullback possibly from shorts covering? Yes, that is a good, very good comment. It's definitely something like that as well. So kind of going into the overall levels for the week and how I actually make my levels. Just let me answer another question really quick. Do you use tape? Yes, I use tape. What he means by that, it's time and sales and level 2. Yes, I will help you with that. Don't worry, I got you. All right, so let me actually go into this before I get off topic real quick. Okay, so how I make levels. So most people, they like to make levels starting on the daily and kind of continuing down, maybe like to the 4-hour or the hourly. I usually don't do that, and I usually actually start on the quarterly. So the reason I start on the quarterly is because it gives me the hardest possible levels. Like each one of these candlesticks represents 3 months of price action. So it's also like super easy to make levels this way, because you already know, hey, this is a pretty hard level, simply because one, it's a psychological hold number around 380, and two, this is 3 months worth of price action, and we violently bounced off of it. So this is clearly a very strong support. So just to kind of get another thing out of the way, most people are going to say you need 3 touches. That makes sense, but usually you only want to care about that probably underneath the 10-hour. You only want to care about maybe 2 touches for the daily, but anything above weekly, like weekly, monthly, and quarterly, you're perfectly fine using just one specific area. So in this case, since this is only one line, well, technically one touch, that's okay to do, simply because we know that this is a strong area. This is 3 months worth of support. Then we have this one. Now, if we can get overlapping, we have 1 month, or excuse me, 3 month here and 3 months here. This even, this is even furthers our thesis that this indeed is a very strong level. So we actually kind of want to make it even bigger, so we know for ourselves that, hey, this is 6 months worth of price action right at this level. This is definitely something of significance that I want to be aware of whenever the price action inevitably comes back down to the 390 region. So then I kind of move up the ladder. This is another area, 409. It depends on how you want to do your personal preference. Some people, just kind of the sidestep really quickly, some people use like color coordination for different lines, like like blue, red, yellow, like whatever, entirely up to you. But some people use different color coordination depending on the time frame, or they just use like different thickness. So that's kind of just a pro tip, so you don't get your levels mixed up in a sense. So then we have another one up here, and then right here, and right here. And then you also can do the bottoms of candles after they've closed. So like technically speaking, you could chart this and this, but I want to be a little bit more accurate and see how they look on the smaller time frames instead of just getting the bodies just right now. So then I kind of already made my levels for the top side and downside, just for sake of time. I don't care about up here, and I don't care about down here just yet because we're not there. So then I would go to the 2 months, see if I can pick anything else. Okay, boom, boom, boom. There's another one. There's another one. And there's the current 2 month, and there's that. So there we go. We already have a couple extra levels. Super, super simple to do. And then we go down to the monthly. Okay, what did I miss? Boom. There's one. Actually, let me get rid of my VWAP. Okay. Boom, right there. There's one. And then we can also consider this one. And then this is where we actually start. This is another thing that I'd like to touch on really quickly. So if you can kind of see here, this is only off by about, what is this? About 60 cents or so. So what you can do if you want, there's kind of two options. You can put two lines here and pretty much add extra real estate to your charts, more clutter. Or what you can do is understand that support and resistance lines aren't black and white. So what I mean by that is just because there's a support here at 410.65 doesn't necessarily mean it's going to bounce at 410.65. What's not to say it doesn't bounce at 411 or 410.50. So just because you see a support here does not mean it's going to automatically bounce. So this is where I like to have a zone of probability, pretty much a liquidity area in a sense. So what that means is I already know that we bounce pretty hard off of this area right here at 411.20. And this once area of support then turn resistance. Now, since we're back over it, now turn support. So this is also concreting that this is still a support area of 410.63. And then since this is very, very close, only about 60 cents off, instead of making two lines, I'm going to basically give myself a zone of where I could be at. Okay, so hypothetically, if the price action ends up coming back down here, now I know that there's a general good possibility that buyers in this case will step up. Now, if they don't step up, that's okay. My bullish thesis is not current at the moment, but it's pretty much saying you don't want to be shorting just yet. So what I mean by that, like just say you didn't know about this. Say you did not know about this line right here, and you start buying calls right at this area at 411.20. But you didn't give yourself, you didn't know that there's an area right here, and we also have a zone of probability. So we didn't bounce at 410.70, but we didn't bounce at 411.20. What's not to say we bounce in the middle at 410.90 or 411? So this way you can give you're able to have possibly safer entries. So, if you know that there's an area of significant demand area, a significant amount of buyers, I wouldn't be shorting this shit. I would not be looking to short this until one, we start making lower highs and lower lows, which is a bearish structure, or two, we completely invalidate this area and our price actions underneath of it. Those are the only two reasons I would be looking to short here. Otherwise, I'm actually looking to buy calls. I'm looking for this area to bounce. So that's very important because a lot of people just look at it cut and dry. Oh, this is a support line. It's got to bounce here. That's not the case. That's not the case. You want to give yourself a zone of probability. Now it has to make sense. Like this is also a good zone. This is 20 cents off. This is something you can also put up. This is 20 cents off. That makes perfect sense. Now this is something that would not make sense. This is pretty far from here and very far from here, right? So the zones that you create must be close to each other. Like right here, this is fine. right here, this is fine. This doesn't make sense. This is too far off. If anything, you can just make this another level, but this wouldn't be a huge ass zone, and this definitely wouldn't be a huge ass zone. And then you kind of just keep doing the process over and over. You like you can make this a zone as well if you'd like. You know, it's entirely up to you. I like to give myself more data though. I like to figure out where I should be a buyer and where I shouldn't be a buyer, where I should be a seller and where I shouldn't be a seller. And then it's kind of just the same exact thing for the next couple time frames. So well, in this case, okay, let me just kind of make it sure. So you don't want to just do the exact same areas the entire time. So like notice how I did green down there. I don't want to do green up here because technically this is a resistance area. So I want to give myself a different thing, maybe yellow, maybe red, whatever the hell you want to do. Just mark it so you don't get it confused. And then this way, that's pretty much how I make my level. I don't, just for sake of time, I'm not just going to keep doing everything, but you get the point. You would then go down to the weekly, look to see if anything matches on the weekly. Okay, perfect. 1, 2, where did it go? Hold on. 1, 2, close to 3. So we know that this is an area. Another really common misconception, just because it doesn't touch like right pinpoint, like this is 6 cents off. You would still mark this. Just because it's 6 cents off, this is clearly still an area. Same thing down here. This is 20 cents off. An area is something of significance that I want to mark. So just because it's not like, you know, just overlapping each other, that doesn't invalidate it. This is still an area of importance. So in this case, since the price action is above it, I would then make this some sort of buying indication. In this case, it's green, or I usually either do blue. I usually do blue simply because I make my demand areas green, obviously entire personal preference, but you kind of get the big picture. That's how I make my levels. I start from the quarterly, I move my way down to the 2 month, the 1 month, the weekly, and then the daily. So by the time I'm done my daily, most of my levels are pretty good to go. Now, if you still have any, you know, if you have some blanks, so like blank, like that type of stuff, you know, it still looks pretty bare, then you can get down to maybe the 10-hour. And then, you know, maybe the 4-hour, entirely up to you. It depends if you're a scalper, day trader, swing trader. If you are, excuse me, if you are a swing trader, you want the hard levels. You don't give a shit about what the 30 minutes doing. You don't care what the hourly is doing. You want those hard levels on the daily, the weekly. You want these hard levels. If you are a day trader, you kind of want a little bit of both in a sense. So that's why I like to incorporate sometimes the 10-hour or maybe even the 6-hour. So this way I can still get more, sometimes some of those like, you know, the intraday stuff. Now, if you're a scalper, then that's where you want to kind of care about, you know, the pre-market high, the pre-market low, you know, really caring about how the last couple days have been performing. Like, for example, this was Thursday high of day. I need to care about this. If I'm trading intraday, I need to figure out what the hell the last couple of days have been doing. And I want to chart this. I want to know what this high was. I want to know what the low was. I want to see if there's a gap to fill, which we have a gap. In this case, okay, this was yesterday, well, technically Friday's low. So we got to pretty much break below Friday's lows to continue lower. So, so then you're able to kind of sprinkle in the larger time frames for your concrete, really hard levels, like, you know, where you want to be taking your profit at, either to the upside or to the downside. And then you can get your intraday levels, maybe from like the hourly to the 4-hour. And you can, like, for example, like this for something like this is a fresh level that just got formed. So this, and we had some liquidity right around here. So we had some interest. So this is still a valid level in the 4-hour. So this is more of an intraday level. And this is why I like to say you want to differentiate which level is which, because if you see here, you don't know which one's which, because I marked everything the same. But in this case, you in a sense, you would have either different color coordinations for whatever time frame we're on, or just different like thickness in a sense. So something like that. Just kind of just some pro tips for that. Just to answer a really quick question, 1 second here. Do you have a hotkey you press to draw the lines? So what I do is I press Alt H. So Alt H is pretty much the hotkey for TradingView. I hope that answers your question. Next question is, are you more of a swing trader or a day trader? Do you go on lower time frames such as the 5-minute and the 1-minute? Great question. I wouldn't recommend the 1-minute nowadays. It's very, it's not very accurate. Lots of whipsaw action, lots of fake outs. Wouldn't recommend it. If anything, I would recommend at least the 2-minute, probably the 3-minute. The 1-minute's a little sketchy nowadays, so kind of keep that in mind. I like to enter and exit. Just to answer your question further, I usually prefer myself as a day trader. So I either enter and exit probably between the 2-minute time frame to the 5-minute time frame. Really depends on how aggressive or how safe of an entry / exit I want it to do. Now, if you're a swing trader, it's a little bit different, and because it kind of breaks up into 2 different parts. How much time are you buying? Are you buying 1 week? Or are you buying 6 months? Right. So like, if you're buying 6 months, you kind of want more of a confirmation. So you would be ideally looking for probably like a 30-minute confirmation or like an hourly confirmation. Some traders are even safer and they look for like a 4-hour close or an entire daily close, for extra confirmation. So it really depends on you personally, how aggressive of an entry you want to be. But if you have time horizon on your side, I would recommend probably at least entering on like a 30-minute time frame. Now, if you don't have that much time on your side, maybe like a couple weeks, a couple months or something like that, I would recommend maybe a 15-minute or a 10-minute or a 5-minute. Really, it's personal preference, really. Like every trader is different. I could be more of an aggressive trader. You could be more of a safer trader, right? So it really depends on everyone, because every trader is different. Hope that answered your question. I don't think Toss has all these time frames. Yes, they do. You can customize it in your Thinkorswim. So you want to go to your time frame things. You want to set new ones. I would highly recommend trying out other time frames rather than the default time frames. But yes, you're able to add extra time frames. I have a shit ton in Thinkorswim. How do you see Amazon with the split coming up? Hard to really say. Amazon has been getting pooped on recently, so they did get pooped on, but with the market bounce, they did kind of, they got the little spike. So we could very well see a tiny bit of a slight rally before the true split happens, and then we could just it's pretty much kind of like a buy the rumor, sell the news type of deal. Like we could just get a little bit of a dump after the split announces, or we could just get a little bit of a pump because people are just aggressively buying Amazon. It can go really either way. Can you show how to read tape? In this time frame, no, but I did make a video. I will post that in the chat for you. Just give me 1 second. It's about a 30-minute video, and if you're not familiar with how to read tape and what level 2s are, highly recommend checking that one out. Let me just post that really quickly before I forget. Here you go. It is actually under 30 minutes, so definitely one to check out. Just posted it in the chat for everyone if you want to check it out. Okay, so then hold on 1 second. Let me continue with some questions. When do you think the recession is going to happen? No idea. It could happen next month, could happen in 3 months. Really hard to say. So the lowest time frame that you plot levels on is the daily. No, usually I like to stay above the 4-hour personally. If I'm looking for like, maybe like quick scalps, I'll probably do like the hourly, but usually I like to make levels above the hourly just because I know they're more, in a sense, that they have higher merit in a sense. How do you pick stocks to add to a watch list? Also great question. I have another video about that. It actually breaks it down to different account sizes, because that's very important. Just to really quickly answer your question, you first have to understand what budget you have. So like if you have a $1,000 account, there should not be Tesla, Amazon, Google. That should not be on your watch list. You shouldn't even be caring about that shit because it brings temptation. So you want to first identify your budget. I would recommend if you have $1,000 account, you need to be sifting through things that are under $300. If they're above $300, you can't afford it. Don't trade it because using more than 30% of your utilization, your portfolio is really not super ideal. If you want to be really aggressive, maybe 40%. So like you could look at $400 or less, entirely up to you. Personal preference, but let me link that one real quick too before I forget. Here's another video I did that explains watch list and watch list criteria. It's very short and sweet, under 10 minutes. 1 second. There you go. Okay. Any other questions? Let me see here. 1 sec. Quite possible if the market sees a bounce. So let me just answer the question. What are your thoughts on Tesla breaking 766 hard resistance this week? Quite possible if the market sees a further bounce, Tesla can continue with it. Can you recommend any books? So the biggest book that I really like is actually a daily trading coach. I can link that in the chat, or it's actually just let me just type it out real quick for people. It's called The Daily Trading Coach by Brett Steenbarger. Okay, so and then another one, I care about more about like mind stuff. So like I care about like manifesting and like psychology, because once you learn like the actual like charts and like price action, it doesn't change in a sense. Like what is changing, what is ever changing is your brain. So I learned more about like manifesting helps with your calmness, psychology books. I don't know any off the top of my head, but I can link some stuff later in the chat for everyone. Any other questions before we end our session today? I'm going to run out of time here on the Zoom call. So just if you have anything to question or anything you want to add, feel free to say it now. SPY basically up to 429 and dropping. Yep, quite possible anywhere from like 425 to 430 or something like that. So that's that. Next one is how much of an importance is level 2? Very, very important. It shows the order book and the actual transactions going on. Super duper useful to check into. If you want to check out that video, I did post it in the chat, or here's my actual YouTube if you want to see other stuff. Next one, 1 second. Can you talk about your mentorship? Sure, if you're curious about stuff, feel free to just send me a message in the chat. I'm a little booked up for June, but I have a little bit of slots left. So if you're curious about that, just message me privately and we can talk about it. Okay, so I hope that answers some guys' questions. I hope you guys had some nice informational gems dropped on you. I hope you learned some stuff. Thank you again for coming and stopping by. I'll start doing these probably once a week. So stay tuned for that. And I can't wait to have a great week with everyone. Enjoy the rest of your weekend, and see you guys on Tuesday.